Welcome back to the channel. I'm Algabot, and this is where we take apart automated trading strategies and study how they actually work, piece by piece. Today we're looking at an expert advisor for MetaTrader 5 called Trendflex Momentum Cross. It's a trend-following momentum approach built on John Ehlers' Trendflex oscillator, a modern, near-zero lag tool that measures sustained trend displacement rather than short-term swings. Over the next few minutes, you'll learn how the oscillator is constructed, how its entry and exit rules are triggered, how the code reads inside MetaEditor, and how a sample long and short trade could unfold. Remember, this is educational information only. Let's dive in. Let's start with the big picture. Trendflex Momentum Cross is a trend-following momentum strategy, and it's driven by a single, carefully built oscillator called Trendflex. This is not a simple moving average cross, and it's not the more familiar reflex indicator either. Trendflex is a distinct construction from John Ehlers' 2020 work, designed to read how strongly and how persistently price is displaced in one direction. Here's the idea in plain terms. First, price is passed through a two-pole SuperSmoother filter. Think of that as a gentle low-pass filter that strips out high-frequency noise while adding almost no lag. So we're working with a clean version of price. Then Trendflex measures how far that smooth price now sits above or below the average of its own recent history. When a genuine trend is underway, that gap grows, and the oscillator swings to a strong positive or negative reading. When the market is just chopping sideways, the reading hovers close to zero. Finally, the raw measurement is normalized by its own rolling strength, so the oscillator scales itself automatically across different instruments and market conditions. The strategy trades symmetrically, meaning it treats long and short opportunities with the same logic in mirror image. A trade signal begins when the Trendflex oscillator crosses the zero line, which marks the moment trend displacement flips sign. To avoid reacting to tiny, meaningless wiggles, the cross must also clear a minimum trigger level, a noise gate. On top of that, the SuperSmoother line itself must be sloping the same way, which acts as a trend regime filter, so the strategy only takes the cross that agrees with the underlying direction. Because it reads whatever symbol and time frame you attach it to, this expert advisor is designed to be instrument agnostic. It's built to shine on trending, liquid markets, for example major foreign exchange pairs or gold on the intraday to hourly charts, but it isn't locked to any one of them. It's best suited to traders who want to study a rules-based, momentum with a filter design rather than discretionary decision-making. And as always, this is educational content, not financial advice, and trading always involves risk, including the risk of loss. Now let's walk through exactly how the strategy makes a decision, step by step. Everything happens on the primary time frame, and the logic is evaluated once per completed bar, so the strategy waits for a bar to close before it acts. The first stage is building the signal. Each new closed price is fed into the SuperSmoother filter, giving us a smooth, low-lag version of price. From that smooth series, the strategy calculates the Trendflex value. It looks back over a window set by the SmootherLength input, which defaults to 20 bars, and sums up how far the current smooth price sits above each of its recent values. That sum is then divided by its own rolling strength, producing an oscillator that naturally settles near zero in quiet markets and swings out to strong readings when momentum builds. Next comes the trigger. The strategy watches for the Trendflex oscillator to cross the zero line. A bullish signal forms when the previous value was at or below zero and the new value rises above the positive trigger level, which defaults to 0.30. A bearish signal forms in mirror image when the previous value was at or above zero and the new value falls below the negative trigger level. That trigger level is the noise gate. It forces the cross to have real conviction before anything happens, filtering out shallow crossings. Then the regime filter is applied. The strategy measures the slope of the SuperSmoother line over a short look back, 5 bars by default. For a long, the SuperSmoother must be sloping upward. For a short, it must be sloping downward. Only when the cross and the slope agree does a trade become valid. This is what keeps the strategy from fighting the underlying trend during flat, whippy conditions. When a fresh, aligned signal appears, the strategy acts. If the signal is bullish, it first closes any existing short position, then opens a long, provided one isn't already open. A bearish signal does the reverse. So the strategy is always positioned with the current momentum, flipping as displacement changes sign. Finally, risk is managed with the average true range. The strategy computes ATR directly from raw true range over the ATR period, 14 bars by default. The stop loss is placed at ATR stop multiple times ATR away from entry, defaulting to 2 times ATR. The take profit is set at the reward risk multiple of that stop distance, defaulting to 1.5. So the target reaches 1.5 times as far as the stop, and both adapt automatically to current volatility. Let's read the actual meta editor code on screen. At the top are the inputs you can tune. SmootherLength sets both the SuperSmoother and the Trendflex window. Slope loopback controls how many bars the smoother must slope to confirm the regime, and TriggerLevel is the noise gate the oscillator must clear. Then ATR period, ATR stop multiple, and reward risk shape the stop and target, and lots is the trade size. Next you can see the signal itself. The variable cross-up is true when the previous Trendflex value was at or below 0 and the new value is above the trigger level. The variable cross-down mirrors that for the downside, requiring the new value to be below the negative trigger. Just underneath, the code measures the SuperSmoother slope and combines it with the cross. Long OK is only true when we have a cross-up and the slope is positive, and short OK needs a cross-down with a negative slope. Now the two order blocks. In the buy block, when long OK is true, the entry is taken at the ask price. The stop loss is placed one stop distance below entry, and the take profit is placed the reward to risk multiple of that distance above entry, before the trade.buy call sends the order. The sell block is the exact mirror. When short OK is true, the entry is the bid price. The stop loss sits one stop distance above entry. The take profit sits the reward to risk multiple below, and trade.sell places the order. Notice both sides share identical structure, just flipped. That's the symmetric long and short design in code. Let's bring this to life on the chart. Across the top you can see the candles, and running through them the blue SuperSmoother line, our clean version of price. Below the candles is the Trendflex oscillator in gold, with the 0 line in the middle, a positive trigger at 0.30, and a negative trigger at 0.30 on the downside. Watch how the oscillator and the price work together. Look at the first 3 candles. Price is drifting lower and basing out, and the Trendflex oscillator is sitting in negative territory, below 0. There's no signal here because momentum is pointed down while price is only chopping. The strategy simply waits. On the 4th candle, price turns up and starts pushing higher, and the blue SuperSmoother line begins to tilt upward. Notice what the oscillator does. It rises up through the 0 line and clears the positive trigger at 0.30. That's the exact moment the long condition is satisfied. The oscillator has crossed up past the noise gate, and the SuperSmoother is sloping up, so the cross and the trend agree. This is where the buy entry marker appears. The strategy enters long at the market and immediately places its stop below entry at 2 times the average true range, with a take profit set at 1.5 times that stop distance above. Now follow the next few candles. Price keeps climbing, each candle stacking higher, and the Trendflex oscillator pushes deeper into positive territory, confirming the momentum is real and sustained rather than a single spike. By the 7th candle, price has extended far enough to reach the take profit target, and the long trade is closed for a gain at the take profit marker. Notice we never had to guess the top. The predefined target did its job as price ran into it. After that, the character of the market changes. Price stalls at the highs, and the 8th and 9th candles start rolling over. The SuperSmoother line flattens and begins to tilt down, and the Trendflex oscillator slides back toward 0, bleeding off all that positive momentum. The strategy holds its fire because a valid short needs more than just a fading reading. Then on the 10th candle, the setup completes in mirror image. Price breaks lower. The blue smoother line is now clearly sloping down, and the oscillator crosses down through the 0 line and pushes past the negative trigger. That satisfies the short condition, so the sell entry marker prints. The strategy opens a short at the market, placing its stop above entry at 2 times ATR and its take profit at 1.5 times that distance below. From there, watch the decline unfold. The 11th and 12th candles close progressively lower, and the Trendflex oscillator drives deeper into negative territory, showing steady downward displacement. By the final candle, price has fallen far enough to tag the take-profit target, and the short is closed at the take-profit marker. So in this single illustration, you've seen the complete symmetric cycle, a long triggered by an upward cross with a rising smoother, and a short triggered by a downward cross with a falling smoother, each managed by the same volatility-based stop and target. Of course, not every signal reaches its target in real markets, and losses do occur when price hits the stop instead. So that's the Trendflex Momentum Cross Expert Advisor. We covered how the SuperSmoother filter cleans up price, how the Trendflex oscillator measures sustained trend displacement and self-scales, and how a zero-line cross past the trigger, confirmed by the SuperSmoother slope, defines both long and short entries. We also walked through the ATR-based stop and reward-to-risk target, read the key parts of the meta-editor code, and followed a full long and short example on the chart. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment telling me which strategy you'd like me to examine next. You can find more at www.algobot.live. And a final reminder, this content is for educational purposes only and is not financial advice. Past performance does not guarantee future results. Trade responsibly.